Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance. And now, here's Philip.
We are back with another episode of Wealth Building Made Simple. Philip Washington Jr., the host of the podcast. I don't ever announce myself as the host of the podcast. I'm assuming everybody reads the show notes. I guess actually on the podcast title, it has my name too. But anyway, Philip Washington Jr. And today we're going to talk about a variety of topics, but I'm going to start with like an interesting story around, it's going to relate to money, but it'll be an interesting story. So, I'm a pretty competitive person. I like competition, right? So those who listen, I took up fighting, to channel my competitive, aggressive energy in a fun way, right? It's the same energy that I use for business. I love, but basketball is like my first love, right? So I've been, playing a little bit in front of the house. And so me and my buddies went to go play basketball late at night. It was a bunch of, 20, 30-year-old guys, good group of guys, like just, a lot of good, aggressive male energy. And which, for the fella out there, it's good to be around that, especially when you know how to channel it in a healthy way, right? But invariably, right, when you're playing basketball and competitive sports, you are going to bump into somebody that doesn't do well at channeling that aggressive energy, right? So I, had a situation where I was guarding a guy, and I guess he's a professional player because everybody showed him a lot of reverence and respect. And so he got one shot on me in the beginning because it was way beyond the three-point line, and I didn't know he could shoot. But after that, I locked him up the whole game. And so he was, visibly frustrated the whole game. And we ended up winning, but visibly frustrated because we were winning. I was locking him down, and so he proceeded for the whole game to just talk disrespectful trash to us. And me, like, I like trash talking, right? I play spades, dominoes, like, man, you meet my uncles. I come from a trash talking family. I typically don't initiate it because I don't know, some people can't talk trash, you know what I mean, and stay calm, and I don't know, right? So I rarely initiate it, but this particular situation, the guy was going out of bounds of trash talking, just being crazily disrespectful, right? So I just looked at him and I said, hey man, you complain a lot, right? And that just set him off, as I knew it would, and he just, started hurling all kinds of insults and telling me, how pro he was, and this is what he did. And I said, hey man, I'm not questioning your skills. Like, you have really good basketball skills. I was like, I'm just saying, I just stated the fact that you just complain like way too much with somebody who has such great skills, right? And that really, so that really threw him off. So he just, John talking trash, telling me that I guess I'm not happy with my life. I'm never gonna measure up to him, right? I'm not even in his tax bracket. He proceeded to ask me like what I did, and I said wealth management, and he's like, oh yeah, you gotta work for your money. So, so anyway, the rest of the game is I kept locking him down. We won the game. I took his confidence. I put it in my pocket, right? I might give it to him later, but I was unmoved by the situation, but it triggered my thought about like finances, and I was like, I like the dude. Like, he's a, good looking, in shape dude that's good at what he does. Apparently he makes money, so he got a lot of things going for him, and a genuinely likable, charismatic guy, right? So good dude. So I go, and I went, man, like that. It's, you realize how having money can throw people off balance, or really placing faith in external things, right? Meaning like in his mind, he said it, he's a better person than me because in his mind, he thinks he has more money than me or in a higher tax bracket, right? And there's no point in debating whether that's true or not. That's not really important. I'm just going to assume he does, right? But the link with that making you a better person because you have more money, right? It's just an interesting, very interesting idea. And I feel like when I meet people who have wealth and enjoy their wealth, that's not a conversation. Like they see everybody as equal. Like, you know what I'm saying? Like I talk to the front desk person, the janitor, my kids, the same way I talk to Obama or Jay-Z if they came in here. Like I treat everybody as a equal. And I find that to be the case with people that have money because they have internal confidence that just expresses itself externally in everything that they do versus not really having much internal confidence. So they place confidence in their external stuff, which allows them to be very easily triggerable, right? And that was this instance, right? So I included it here because everybody's on their journey, and I'm not judging the guy. I just, he's a, typically in that scenario throughout my life, I've always become really good friends with that personality type because when they calm down, they really realize the level of restraint I held, in the situation, and they admire and appreciate it. But let's get into the podcast episode. Investing in dividend stocks is where we're starting. So I've been getting questions about investing in dividend stocks, particularly from people who are not in retirement. And so let me sort of unpack that for a second. So dividend stocks let me start with what makes a company create a dividend. So let's say, you're an investor, you give a company money, right? And you go, all right, I could take this money and I could put it in my savings account, but that's not going to earn me much money, right? But savings accounts pay interest, right? So you can look at the interest and you can determine what your rate of return will be over time. Then you can say, all right, I'm going to go to bonds, right? And bonds have a stated interest. So if you keep your money there, you get a stated interest, right? Then you go up to stocks, right? And so in the stock market, the baseline benchmark is the S&P 500, which has a lot of companies that pay dividends, but it's a slower growing company because it's the largest companies in the U.S. that are not at hyper growth yet. But you go, cool, like the S&P 500 has historically grown at 8 to 10% a year, right, with dividend, if you include a dividend and growth, right? And so you go, all right, I can put it here and get 8 to 10% a year dividend and growth. So that's cool. So if you're a company, you're competing from capital from those things, right? So you take a company, let's think about like Coinbase, right? And I don't know the numbers off the top of my head, but let's say it's safe to say that Coinbase has probably been growing their revenue and cash flows and stock at greater than the S&P 500, right, for the last 5-10 years. And so you go, all right, and Coinbase doesn't pay a dividend, right? So let me just pick a number. Let's say, a company's growing at 20% a year, they're paying no dividend, S&P is growing at 10% a year. Then you're going, cool, like I don't really need a dividend because obviously you are taking the money that you're making, the money that we invest in, and you're growing it at above what I can get easily in a savings account, bonds, or the S&P 500. So like just keep the money. Don't pay me a dividend. If I need cash from my investment because it's a liquid stock, if I'm making 20% a year, right, on average over time, I can just sell, let's say, 5% of it and leave the 15% in to compound and grow and create my own dividend, right? I don't need a dividend to generate income from a stock portfolio. I can just sell a percentage of my shares every single year. And so if a company is paying a dividend, then that means that the company's the chief financial officer and the executives have said, yeah, we really are not going to be able to grow money at a rate, let's say above the S&P 500, because that's sort of the benchmark stock market. That's the benchmark index that publicly traded companies use to decide on how efficient they are with allocating money, right? So dividend stocks are, I think, a better idea to hold for maybe retirees, because interest rates are so low relative to inflation and you don't get appreciation. So at least with Apple stock, right, you get a dividend, which is not very high in percentage terms, but you get a dividend and you get appreciation, which is overall, if things work out, a better inflation-adjusted return than just putting it in bonds and cash. You got to deal with volatility in stocks, but if you're, investing for a 10, 20, 30-year retirement, then, what happens in a year from a fluctuation standpoint doesn't really matter. So let's get to day trading. Day trading, I've been asked this frequently, like, what are my thoughts on day trading? And I'm going to answer it two ways, right? So there are certain paths that we take from a genuine interest of love, right? Meaning, like, we are in love with this idea. And when you're in love with an idea and you can hold that feeling, you get access to intuition. And when you have access to intuition, your mind can find connections that are better than the most fastest AI trading software on the planet, right? Intuition is light years faster than artificial intelligence reasoning, right? It's what people might look at and call, if you ever read the old trading books and the trader was like, yeah, I was just looking at this ticker symbol and someone just told me to buy and I bought me a lot of money, right? That's intuition, right? It transcends time and space, right? So, but most people who are asking me this question are not operating from that energy. They're operating from the rational intellect mind. And so when you're thinking from a rational intellect mind, then you're dealing in probabilities, right? And so then you go, all right, well, and my first test is, let me ask, what is your interest in day trading? And almost always it's people want to make quick money, right? They're unhappy with the money they're making right now and they want to make some quick money now, right? And so off the back, I know that's not an intuitive perspective, because intuition requires patience, satisfaction, enjoying the process, right? No rush. It's a different energy. So you're not in the intuitive track, right? So then you go, all right, cool. Let me explain to you in day trading who you're competing against, right? So since you're using the rational mind, right? Whenever you're using the rational mind or intellect or reason, okay, then you got to say, well, in this game, who am I competing against? You're competing against AI. You know what I mean? In day trading, meaning now you got to say, it's the equivalent of saying, using reason, the human mind can't beat a calculator calculating complex numbers, right? A calculator is going to win calculating complex numbers from the reasoning perspective, using the reasoning mind, right? So day trading, you're trying to calculate spreads faster than AI in the short term and make money doing that. You're just not going to win long term, right? Go look at the Forbes, go pick any year, look at the Forbes. I mean, and if you find, day traders, right? Not hedge fund managers who make billions in fees, trading for big institutions, multiple strategies. Side note, like, the returns are not as high as you think it would be. But you don't see any billionaires from compounding a trading strat form, trading thing to get on that Forbes list, right? You know what I'm saying? Don't get me wrong, you do have billionaire traders, but most people who are talking about day trading have not gone into the nuance of, like, what these traders actually do, right? How they have multiple trading systems that they're working, right? The ones that are making money are using computerized systems, right? And then you have the old school traders who are even today, but they're more trading strategies that are betting a lot on volatility, which is a more patient approach, like Nassim Taleb, right, who doesn't need to make money every single day. Matter of fact, Nassim Taleb makes more money than most traders make in a decade in 1 year, right? And he'll lose money for the next 4 or 5 years, right? So it's a different approach. So I'm saying it to say, anything's possible, right? Chase your dreams. I'm not a dream killer, right? Day trade if you feel like that's what you want to do, but just understand it's the equivalent of saying, of me saying, hey, I want to make some money and I'm gonna bet on myself playing LeBron James 1-on-1. There's probably easier ways to make money, right? Right? Then I mean, could I beat LeBron James? Is it in the realm of possibilities? Anything's possible, right? Is it? And I know would not be operating from an intuitive perspective, right? Which would be my only chance, right? So if I'm not operating there, then it's not a very good bet. Next topic. Do presidential candidates affect my investment plan? Not at all, right? Not at all. The attractiveness of real estate, equities, or any property is going to be the system's relative attractiveness to capital. Meaning, like, are the property rights relatively free? Can we own property? Can we have confidence that the government won't confiscate it? And that's a relative term, right? Because there's no perfect system, but it's a relative term. So you look at America, and even though we're pretty dysfunctional, it's relatively favorable for capital, right? And our dysfunction allows us to, like very good artists are good with sitting in an internal conflict and then turning it into a positive expression. You go back to my story in the beginning, right? The thing I love about sports and competition is the emotional conflict. Competition is internal conflict, right? Some people fold with the conflict and express in an unbalanced way, and some are able to sit in that conflict and stay poised and confident and focused on what they're doing, right? And we all have our journey relative to somebody else who's better than us, and we're always getting better. But I'm saying, like, that's what investors are looking at. So America's conflict is sort of like our superpower, which makes it like super attractive to, in this current moment in time, capital. Not to say any other places are not attractive to capital, right? Because again, there's some things that we do that are not attractive to capital, right? And so, presidential candidates, do they affect the market in the relative short to midterm? Let's say, months to maybe a couple of years. Yeah, because they, like, anytime you bring an administration in that has a different opinion, there's literally a ripple effect, right? Where the market's figuring out how this is going to change dynamics. But then once the market wraps their mind around the change, it can find equilibrium, and then capital can flow where it's going to flow, because no matter how powerful central authorities are, they cannot stop the wave of money flow. And if they can, capital leaves, right? Meaning, like, Bitcoin is one of my favorite investments in the current spot, right? A lot because I know the governments around the world are going through a lot of conflict and everybody's going sort of crazy, right? And it's a Switzerland in cyberspace, right? Where you can store capital and be away from the foolishness, right? So, and the more foolishness, the better Bitcoin does, right? But after foolishness stops and companies understand the benefit that it can benefit them and they embrace it, like, Bitcoin still wins. And so it's sort of that when you're an investor, you're looking across space and time and you're going, all right, let me find the most attractive place for capital. So presidential candidates don't affect my investment plan because I factor in the conflict into my investment thesis. Because if like, insecurity causes irresponsible conflict, right? And insecurity in financial terms mean, like, the perception of lack, right? Lots of debt, right? Governments are going to act the way they act when they have lots of debt, and they typically have had a lack perspective on resources, which is why we go to war over resources. They reflect the will of the people, so you look at the people and see how people are acting, and they're acting very lackful, right? And so then you can go, all right, I'm gonna take these emotions into account into my investment plan and allocate according to the emotions. Here's something I don't think I ever really said, and I was talking to my friend on the phone, and we were talking about business or something, and I say, you know, humans, we think that we're so rational, right? Because we think a lot in moments through our rational mind, but like we're actually highly irrational, right? I mean, we're very irrational, meaning if you think like logic flows from our emotional state, you know what I mean? Like if you're angry, you get a different set of logic than if you're happy, right? And if you're frustrated, you get a different set of logic for the situation, like logic being like thoughts that become expressions. And so if you can tap into, if you can intuitively feel the emotions of different markets and people around the world, then you can get a very good idea of how people are going to react relative to like what they're saying, right? And where you really want to go is you really want to get the feel of the people, because politicians are just mascots for the people. Politicians want to get reelected, so they're going to do what the people, they're going to mirror what the people feel like. And if you get too intellectual and too smart and you go, yeah, but the people want something dumb, right? No, the people want what they want. And who are you to call it dumb, right? They want what they want. And so like just tap into it, understand it, and then invest accordingly. And you can bypass and have a long-term approach, and you can bypass all this short-term volatility of the changes. Because net over the longest term, right, humans are going to get it right. And we'll get plenty of time to correct course because emotions take time to change. That's the other part. Emotions don't change on a whim, right? Thoughts might, ideas might, but emotions take time to process. And so that's why I can invest in a decade, because I'm investing on the process, the emotional process that humans go through change. I think I got time for one more. So I had a couple of friends that talked about how they missed NVIDIA early on and missed Bitcoin early on, so they're looking for the next things. And so I was saying, okay, when you're an investment allocator, you got different options, right? So because I didn't buy Bitcoin aggressively until 2020 when it was already established, right? I understood what it was, I understood the fit, I understood the industry wasn't going anywhere, and I started getting real big into it because before then, it was speculative. And if you would have, granted, if you would have bought it early on when it was speculative, you could have made a lot of money. But how much money would you really have put into something that you were guessing, right? Not a lot of conviction, right? So meaning like you got one approach where you can have you can have $1 million, you can have 100,000, and you can put $1,000 into 100 ideas, and the 10% of your ideas that end up being home runs in that area are going to pay for the losers and the mediocre ones, and you can make a lot of money, right? And that's one way to make a lot of money. The other way to make a lot of money is you wait for an industry that's new, because technology industries typically don't go in reverse. Like I haven't seen it in history where we had a new technology that was at a disruptive scale that went backwards, right? So you know it's going to continue, and then you wait till there's a clear winner, right? And then you just bet super big on the winner, right? It's a lot like if you play spades or poker, you know what I'm saying? Like that's all about just knowing when to go all in, right? And most people are gambling. They're not really betting properly, right? So like you take something like Bitcoin or NVIDIA and you understand the massive scale of where the world is going, and then you combine that with the massive amount of money governments have to print to solve their debt problems. And then you think, where's that inflation going to go into? It's going to go into the future, right? So NVIDIA being worth $3 trillion, that's nothing, right? In a decade, I am very comfortable saying NVIDIA be worth $30 trillion. People might go, that's a big number. Well, so was billions at one point in time. You know what I mean? Like you gotta adjust your perspective, right, to where the world is going. And so if you got something worth $3 trillion and it's the leader and it doesn't have much competition and it's growing stupidly crazy, and then you understand how difficult it is to replace that thing in a decade, and you go, so I can put money in a decade, it's highly probable I'm going to do 10 times my money, right, assuming things play out. You go, I'm just going to go really big, right, because NVIDIA is not a risk anymore, right? The risk is just how much are they going to make, right? But they're probably going to make a lot, you know what I mean, outside of some catastrophic, type of an event. So anyway, hope this helps. Until next week, y'all enjoy yourself.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.